The layoffs this year in tech is a story. It's not covered, I think, the way it should be. It's been horrific. It's only we're coming up to the end of the fourth month of the year, and the layoffs are just about 100,000 people. Today may have put it over the edge with Meta, also known as Facebook, announcing an 8,000 person job cut. And they're also canceling the hiring of 6,000 new people. And also, Microsoft announced that they're offering voluntary layoffs for the first time in their 51-year history um, to get more efficient. It's not necessarily what you think. Oh, AI, yes, this is this is no question related to AI, but it's not. I guess it doesn't really matter how it's related to AI. Companies are eliminating people. For example, Amazon recently eliminated 16,000 positions on top of another layoff last fall of about the same size. They're not necessarily doing it because these jobs are being AI'd, making it like a verb or an adverb. Okay, so it's not that. What it is these companies are actually eating into their once incredible cash flow, spending above and beyond cash flow, in particular, Amazon, as an example, and borrowing money to keep up their massive spending in AI. So far, shareholders are letting them get away with it. The stocks have held up quite well. Um, Nasdaq, S&P 500 just hit record highs yesterday, and they've been hitting highs for the last week or so. By the way, you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. So these are the things that I think need a little bit more. Um, I don't know if you'd say explanation, but I think they need a little bit more cover. Let me just show you this. Let me see if I could share screen. I have not done my live streams in months, and I'm just getting back into it. We've had a lot of corporate changes, a lot of things going on, so I'm doing it now. And some of the software that I use has actually had some major upgrades. I'm very happy about it, but it also means that I have to hunt a little bit to find exactly where I want to go. Okay, so let's show you this one. Okay, let's put this one up here, and I will stay on the side over here. This is what I want to show you. This is the headline. All right, did it change yet? Let's stop the share. This is annoying, but let's see if we could change this a little bit and get rid of that. Stop screen, share screen. Okay, this is what I want to show you. Oh, here it is. It's right in front of me. All right, take a look at this headline. All right, tech layoffs 2026. Over 96,000 employees have been laid off this year across Oracle, Amazon, Meta, Disney, Snap, and more. Um, I don't think this is counting today's news from Meta, which came out later in the day. So even though this is a new article, you could say that we are over 100,000 layoffs, firings, eliminations, whatever you want to call it, in the tech sector. So I don't think this is getting enough coverage. I think it's a big story. I think it's a bigger story than most people realize because AI, I'm not a doomer about AI. I think AI is also creating a lot of job opportunities also, and it's certainly making us a lot more efficient in how we serve our clients. So I'm not someone who's out here knocking AI. I'm a heavy user of it. But I think that the expense of the AI is the bigger driver of the job eliminations than the actual AI or the agentic abilities of AI itself. Companies are looking to conserve cash. They're looking to make sure they can keep up their spending in what they see as their best, most successful future, which is in AI. No one's talked about how these companies are going to make money yet. Enterprises, that means business accounts, are spending and signing up quickly. Individual users are paying $20 a month. More and more people are doing that. The growth is there. And the revenues are expected to go up 8, 10, even more times than that over the next 4 or 5 years. So we will see. It does appear that the demand, not it does appear, it is known the demand for AI is insatiable. So I think this is a story that bears watching, and I don't think it's getting enough play. I think it's a missed opportunity to talk about something very, very important. I also want to talk to you about Kelshi. Or is it? Let's talk about that. Okay, I'm sorry, Kalshi. I'm not a big follower of Kalshi and what's the other one? Policy market. I'm not a huge policy market. You know where I say that. I'm not a huge follower of policy market and Kalshi. Kalshi and Kalshi and Poly Market are the big Kalshi and Poly Market are the big betting sites. But I think it pays to pay attention to them. It gives you an idea of what people are starting to factor into their forecast. If enough people believe in something, that if enough people believe something's going to happen, they could actually cause it to happen. If enough people believe that we are heading into a recession or that we are in a recession, it means people will start to cut back on their spending. That alone can cause a recession, a lowering of consumer and business spending. Think about this. If you cut your spending, it could be good for your economics. But if we all do it, it's actually bad for the economy, which hurts the economics for everybody. And it becomes a self fulfilling policy. Um, Self fulfilling prophecy. It becomes a self fulfilling prophecy. That is what I meant to say. So, what Kalshi is betting, what bettors there are saying is that the war in Iran could go on into July, maybe longer, and they only give maybe a 40, 50% odds of oil trade, defined by 60 oil ships, large oil ships going through the strait every day. They don't see that getting back to normal until maybe July. So it's only April. So we've got a couple of months of that. And if we have a couple of months, and I'm just looking at national gas price and AAA is $4.03. It's been between 4 and 4.09 for the last few weeks. It was a year ago. It was $3.17. I'll show it to you right now. Exactly what I'm looking at. Share screen. I'm getting really quick with this. Okay, share. Take a look at this. I'll pop myself up into the side over here. All right, you see that? I don't know if you could see that. I'll see if I can make it a little bit bigger. Okay, $4.03. You can definitely see that. National average about a week ago was 409. Now it's 403. It's up a penny from yesterday. $3.17 a year ago. It's a pretty big deal. We're just talking for regular. It's a pretty big deal. And how much longer can we see prices stay this high? If it goes on through July, I think it basically kills summer spending, tourism, travel. And then you start getting to the back to school sales, and then you have to start thinking about Christmas sales. So I think the thing that confounds a lot of people is, how does the stock market stay? I think the thing that confounds a lot of people is, how does the stock market stay as high as it is? The belief is that AI spending will continue a strong capital spending campaign. Okay. And couple that with the belief that oil prices will go back down and we will have a deal with Iran pretty soon. But I think, as a make pretend geopolitical strategist, that Iran is really playing the long game, and they know how politics in the United States work. And if they can keep oil prices high for a little bit longer, that actually influences politics in the United States, could bring in a different political regime who is more likely or more apt to end the war and maybe be an easier party in their eyes to work with. So this is going to, I think, be get more volatile. I want to say, buckle up, Buttercup, and keep your eye out on what happens over the next couple of months. If this war, if this closing of the Strait of Hormuz goes on into July, I think that means a really Bad recession is coming, but we don't know for sure. And I think right now, hope springs eternal. How do we invest in this? That's a topic for an entirely different day, and that could be the topic for the next live stream. If you want more information, you know where to reach me. But that's the way I see things now, and I think you should have the lay of the land. All right, that's it for today. I'll see you Monday. Thanks for watching.